With the world going to hell in a handcart, where is the best place to store your precious wealth? Should you hold it in stocks, bonds, gold, property? What about peer-to-peer, crypto, cash?
We need to understand how these asset classes have been coping with this current market crash, along with how they have historically performed coming out of recessions, and the fundamental strength of each asset class.
Having looked at these factors, we now have a plan of how we are going to invest during this crisis. And we can tell you what we are going to be buying, because we definitely are buying. Let's check it out.
Welcome to Unshackled.com, the investment channel and website that sets you and your finances free.
That was Andy and I'm Ben, and welcome to the new format during self-isolation. If you like what we say, hit the like button and click subscribe.
Links to many of the cash boosting bonuses mentioned in the following can be found on the office page at Unshackled.com, including this one from one of the top peer-to-peer lending platforms in the UK. Dip your toe in the market by opening a new account with RateSetter for £10. You will get a £20 cash bonus in return. How can you lose? The link to all of our cash bonuses is in the description below. Now let's get into the video.
Stocks. Headlining the news the world over, the stock markets are in free fall, or are they already at the bottom? Unfortunately, we can't see around the corner into the future because we're only human, so we can't tell you with certainty whether the current crash is yet at the bottom or not.
If it were at the bottom, it would be absolute perfect time to buy. Historically, stock markets have always gone on to recover past their previous highs after a crash. As a reminder, look at what happened in the years after the 2008 stock market crash.
The 2008 crash was on the back of sincere, deep-rooted problems with the world economy. The banking sector was not fit for purpose and debt out of control. And yet the world bounced back. The 2020 crash is less to do with fundamental economic errors and is almost entirely to do with the health scare and self-isolation caused by COVID-19.
If you are invested in individual stocks, you will likely take a pummeling, as various listed companies will go out of business, or at the very least their profits will take a beating. Many shares will go to zero and not come back.
If you are invested in index tracking ETFs, like we encourage everyone to do, then what goes down now will surely go up later. As companies in an index go bust, they will be replaced by other, more resilient and better companies.
This, combined with the eventual recovery of the economy once the virus has been brought to heel, will very likely lead to all current unrealised losses being erased and replaced with gains. Remember, it's only a real loss when you sell.
If you're thinking about investing in the stock market, then now is as good a time as any. It is of course impossible to know when the bottom of a crash is until after it has happened, so we are drip feeding money to stock market investments throughout this crisis.
We usually only invest monthly, but now we've supercharged our investment frequency to take advantage of this bear market.
We at least know that prices are lower now than they were before the crash, so we are getting a bargain without necessarily getting the theoretical best price. When investing in individual stocks, this strategy doesn't necessarily work, but the entire stock market has an excellent history of rising over time.
We invest mostly in the stock market with ETFs, but some of it also goes into robo-investment platforms that invest in ETFs also. Examples of the platforms we use are Freetrade, Nutmeg and Interactive Investor.
Bonds. Bonds pay you an interest rate, so you might assume that with the recent slashes to global interest rates, that bonds would be an unattractive investment right now. Well, it's not that simple. Bonds also carry their own market value, similar to shares, and historically have been a popular alternative to stocks during a recession.
Let's look at the US government bond 1 to 3 years. It's absolutely smashing it during the start of this crisis, as it has some gains and is not in a loss position like most shares. However, it is worth noting that these gains are in the past, and it is unknown whether these will rise further or whether stocks will instead start to tick upwards.
People flock to the safety of bonds when stocks fail, but there is a fair amount of jumping on the bandwagon going on here if we were to buy into bonds now. We might look to buy a few now and sell if the stock market looks set to recover.
Again, we'd buy bonds using ETF trackers in the same way that we would buy shares, but as you'll probably know, we're not very keen on bonds due to the current low interest rate environment. And again, Freetrade and Nutmeg are decent platforms that make available bond ETFs. Or you might want to try a Vanguard Life Strategy Fund, which is weighted in favour of bonds.
Gold. Another traditional hedge against stock market crashes is gold. Gold is currently holding its own against rampant market gloom, so maybe a useful addition to your portfolio. I always hold on to a little gold anyway, just for this reason. Despite it not paying dividends, people love to buy gold during a crisis, so you'll usually see good returns on gold whenever the world goes into panic mode.
Again, we would buy gold through an ETF. Are you seeing a pattern here? You can invest in gold through all the platforms that we've mentioned already. Some people buy gold coins and bars physically through the likes of eBay or specialised gold companies, which is one way of doing it. Just be careful of postage and sales fees eating into your returns.
Property. Buying residential property is difficult right now. With empty offices at estate agents, banks, etc., and owners not wanting people to enter their homes, the property market is slowing down. If you already own an investment property, you may find that some tenants struggle to pay rent, given the uncertain nature of their own incomes. I am helping out my tenants where I can by offering payment plans and being generally understanding of their difficult situation.
There is some limited help for landlords too, including payment holidays on mortgages, but at the time of filming, the help available to landlords from the government has been rather underwhelming. With any luck, the current crisis will resolve itself within months and the rental market will return to normal. People need housing, and tenants need landlords who feel able to provide such housing.
Peer-to-peer lending. One of our favourite asset classes for its regular high interest returns, peer-to-peer lending is performing as well as could be expected during this crisis. We have received emails from all the major platforms telling us exactly what we wanted to hear. That interest rates would not be cut following the Bank of England's slashing of interest rates to 0.1%, and more importantly, that measures are being put in place to protect liquidity.
The Funding Circle platform went through a difficult time in 2019 regarding liquidity, as the access to cash was delayed due to many people panic selling.
Other platforms have learnt from this and are offering competitive interest rates when you accept a fixed withdrawal period or withdrawal fee. For instance, the Lending Works platform gives an extra 1.4% return when you choose to accept a 0.5% fee for early access, while Rate Setter encourages you to save for the long term by adding a 90 days loss of interest withdrawal fee to their highest interest account. This is actually really good for you and your liquidity, as it discourages other investors on the platform from withdrawing early.
It's not all sunny. We predict that there will now be a higher chance of defaults during this period of uncertainty, but with the package brought in by the government to help small businesses, we're hoping it's not by much.
Platforms are holding back cash from issuing as many new loans to protect investors' liquidity, but as long-term investors, we don't want to be withdrawing from our peer-to-peer assets anyway. Instead, we want to keep getting those high interest payments each month to live off. Still, remember our top tip with peer-to-peer is to diversify your wealth across multiple platforms, thereby limiting your platform risk, especially true during a recession.
Cryptocurrency. It seems the market has lost confidence in Bitcoin following the corona crisis, falling from over $10,000 in February 2020 to $5,000 at one point in mid-March, half of its value gone.
It's understandable when you consider that, although sexy, a Bitcoin is pretty useless. Of all the asset classes, crypto is the most affected by emotion and groupthink, as there is no real underlying asset other than a bit of code that people assign a value to.
Cryptocurrency is not yet at the stage where it can be used to buy things efficiently. Pretty crap for a currency. What you're buying is a bit of code that other people think is worth a lot of money.
But is now a good time to buy crypto? On the face of it, if you ever were going to buy into crypto, then now might be a good time. Bitcoin is half the price that it was a month ago.
We expect the mystique around crypto will continue out of this recession and prices will climb again. But who really knows with an investment that has no underlying physical assets? Maybe it's worth investing in a few quid, or perhaps it's best to stick to stocks. We won't be investing though, as it's currently a very speculative investment with no fundamentals to back it up.
Cash. You might be tempted to simply ride out this recession by investing your fortune into a bank savings account or cash ISA. Look, you know what we think about cash savings accounts. They keep you poor and lose you money in real terms.
But it is sensible, especially in crazy times like these, where we don't know if civilization will come out the same on the other side, to have a big cash buffer so you can pay the bills in case you lose your job.
But hold everything in cash and you miss out on the many opportunities that this recession presents.
What we're buying. We're hoovering up stock market assets every few weeks as the price falls further, hopefully getting a great average cost overall. We do this because we don't know when the bottom will come, but happy to buy when the price is good, if not at that mythical perfect.
And we're drawing interest and rent from our existing peer-to-peer lending and property portfolios. We're still putting small amounts into peer-to-peer lending, but we're focusing on stocks because the stock market really does need to be taken advantage of right now. Plus, we already have sweet peer-to-peer portfolios paying us high interest each month. We would be opening up new peer-to-peer accounts if we hadn't already used up our sign-up bonuses on all good peer-to-peer platforms. If you're a new customer, you can scoop up literally hundreds of pounds in sign-up bonuses using the links on the authors page at moneyunshackled.com. Exactly the kind of free cash giveaway that we all could do with in these turbulent times.
What we're not buying. We're not buying bonds or gold right now because the time to buy these hedging instruments was before the stock market crash. Buying now would be trying to jump on the hype train long after it left the platform.
We're not buying property right now. The rental market is too uncertain, but the properties we already have are still performing. For now, we're not buying crypto. Yes, it's half price, but so are many stocks. And we are not going to be putting our money into cash savings accounts or cash ISAs because there are simply too many opportunities right now in the markets to go into defence mode. That said, we will not be touching our emergency funds.
Question of the day, what are you buying during the crash and why? Let us know in the comments below. Thanks for watching! On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is moneyunshackled.com. See you next time.